What's going on, guys? Bexio back, and today we had a brand new video on Elon Musk. A couple days ago, he had some tweets going out saying talking about inflation, asking what other people thought, and gave a little bit of his own insight that he thought was going to be a good response to it. And he is the richest person in the world, so we might as well give it a little bit of a listen to and see what he thinks. But before we get into that, if you're not subscribed, make sure to smash that sub button because we're on the road to 1,000 subscribers. But let's look at Elon Musk's tweets about inflation. Here is the first thread. A basic question, just what are your thoughts about probable inflation rate over the next few years? So really kind of asking if this high inflation is going to stay or if people think it's going to go back to normal. And there's a theory if enough people think something's going to happen, then it will happen. So if people think there's going to be insane inflation, they will create insane inflation because they'll go out and they'll buy everything now because they don't want to pay higher prices later, which pushes prices up because they're buying stuff now. So you can kind of self-fulfill your inflation things and do it with anything too. It works with much more than just inflation, but that's how people could do it with inflation. And even his responses here saying Tesla and SpaceX are seeing significant recent inflation pressure in raw materials and logistics. So that's not good news. That's supply chain stuff. Obviously, materials. We all know commodities are skyrocketing. Oil is actually coming down now, but it had its skyrocket. Wheat skyrocketed, might be coming down now. But there's all these commodities going up in price very, very quickly. And you also have Michael Saylor coming in talking about Bitcoin and why people should do that and consumer inflation, all of these things. I think he's pretty spot on about, and obviously I agree with him about Bitcoin. But Elon Musk says that not unpredictable to come to the conclusion. I don't know if that was supposed to be dig or something, but his next response is just talking about what you can do, what people should do, especially during times of inflation, is people looking for advice from this thread. It is generally better to own physical things like a home or stock in companies you think make good products than dollars when inflation is high. I still own and won't sell my Bitcoin, Ethereum, or Doge. So he's obviously talking about people make sure you have investable grade assets. You need assets. I would argue you need assets all the time. That's what you should be trying to get. But especially during inflation, you want your money in real estate. You want your money in great companies. Recently, the stock market not doing great. So, that might not be something people are really looking forward to. And even Bitcoin and crypto things aren't doing great recently. But if you go over longer periods of time, it's obviously a lot better. But you want to own things like real estate. You want to own things like stocks. You want to own things like Bitcoin, Ethereum, probably not the rest of random crypto that's just a bunch of scams put together to get people to give them money. We can even see looking back. This is from December 2021. Home prices set to soar in 2022, predicts Zillow. But we can look at what happened over the last year, 2020 to 2021. It was 19.5% jump. So the overall, there's obviously was sections that had 40% increases and sections that had way bigger increases than that. But the average was 19.5%, which obviously way outpaces inflation. Inflation, even at these numbers at 7.9%, 19.5% more, you actually beat inflation. You were able to make some money and make sure you didn't lose it to inflation by having assets like real estate. Now, the big question for some people would be obviously stocks and crypto or Bitcoin would be the easiest way to get into kind of hedging against inflation, trying to get into assets instead of holding cash, which we all know for this year so far, it would have actually accelerated your loss. But we can see this is the S&P 500, or this is the VTI. We can go to the S&P right here. It's basically the exact same chart, but this is the beginning of the year, January 4th. You can see, it's been all downhill. 440, and we're at 404 right now. So been pretty big downhill moves for this year. We know that there's better to own stock than to hold in cash. But if you only had for a short period of time, then you're at a bigger risk. But if you can look out for a long period of time and have great assets, the Apples of the world, blue chip stocks, Disney, McDonald's, these giant corporations that have been around, proven they can be around and stay around, that over a longer period of time, you could get rewarded. So right now, you have this very big downtrend, something that's losing people money. If you're holding it, if you're buying dips, you're still ultimately, except for the most recent one, losing money. So what you want to think about is the longer term, trying to go out for years, 5 years, 10 years. And if inflation's bad now and it can maintain a higher level of inflation over, say, this year, you get break even things for rates of stocks. But then next year, you get an amazing year. So then that would make up for what the stock market did, and as well as something like Bitcoin, which has been extremely volatile, but actually isn't as bad as the stock market here. You can see 47,924 would be kind of what we came into the year at, and we're at 40,000, almost 41,000 right now. Not too far off, still down, still negative. So if you put your money in here for an inflation hedge, you actually end up accelerating your losses. But the most important thing is to not look short term and to look long term. When you're investing in anything, you want to look out 5 years, 10 years, how the long term, so that you can actually capitalize on gains and actually ride those waves. So one of the biggest principles in investing is just being consistent, buying every week or every month, however much money that has to be. Doesn't have to be a lot of money. It can be $100 a month. That is still better than nothing. Being consistent at that and continuing to buy into great assets over a long period of time is going to be good. And we all know, with inflation at 7.9%, probably coming in next month at 8 or 9% due to these sanctions, everything going on, that it is a lot better to hold these assets that even might be volatile and might be down right now, but could very easily turn around and go up even in the short term, but definitely in the long term. Great assets win is better than holding cash, which will never go up. You're not going to get deflation times. They're not going to allow that to happen. So you're going to get this 8% inflation maybe for the rest of the year. Even if you're absolutely lucky and the Fed's right and you get 4% inflation averaged out for this year, you're still losing 4%. And then even if you go back to 2%, you're still losing 2% a year. You will never go and see your purchasing power increase and see something where there's deflation and all of a sudden you're making 2% on purchasing power in your bank account. You will always be losing purchasing power. That's just how it's designed. So Elon Musk is the richest person in the world. Maybe it might be worth listening to him and seeing what he's got to say. But that is going to do it for this video. As always, don't forget to smash the like button and subscribe on the road to 1,000 subscribers. I'll see you guys in my next video.